Mayuresh Joshi as well of William O'Neill joins in. Hi, Mayuresh. Mayuresh, you just heard Mr. Gurnani detail his plan going ahead. They want to focus on organic growth. They'll be announcing a CEO, but it's not in the near term. Some part of the street believe that early Feb we'll be getting that announcement, but that's not likely to happen. What's your take on the stock? It's still close to 35-40% away from its recent peak.
It's resting very close to its pivot levels. Though on the EPS rating, some strength needs to be derived on the OE ratings. I think two, three things that Mr. Gurnani mentioned, specifically in terms of expansion of the EBIT margins. In the previous quarter, EBIT margins came close to 11.4%. Out of all the levers that he mentioned, which included reduction in subcontractor costs, utilization level improvement, I think that is going to be the biggest lever for the stock itself. The all-time high in terms of tech mining was close to 88%. So they're able to get that in terms of the 5G capex spends for telecom, stroke, infrastructure across the globe. I think that utilization level can act as a big lever. The second element is also the exit of low margin businesses. They've already exhibited that in the previous two quarters, and that should lead to better EBIT margins going forward as well. So I think a better EBIT margin performance expected in the next few quarters. From a valuation startup, Nigel, at this point of time, I think it's one of the more reasonable stocks within the IT space. Even if you assume an EPS of almost 90 or rupees for FY25, it trades almost at 11.5 times. So I think there is a sufficient amount of opportunities for the stock itself, stretching at the pivot, as I said. So yeah, I think the numbers are good. And it is able to cross 1100, which is one of the key moving averages for the stock. There can be momentum in the stock, aided by the numbers.
Mayuresh, Varun, Beverages is a stock which is doing quite well. There was a note from Jefferies today, and the stock has been an underperformer. It's lost about 16% from its 52-week high. Do you think that's an opportunity for people to enter in?
The numbers have been very solid, Reema. If you probably look at the number of cases they've sold, 670 million odd compared to 570 on a year-on-year basis. EBITDA margin has seen a significant amount of stability, landing around 22% at this point of time. And the sheer volume growth, which is continuing both for its India operations and the operations in Africa as well. I think that continued volume momentum might very well sustain earnings growth going forward. The second element, obviously, in terms of the product mix as well. Carbonated drink 70%, water 25%, juice 5%. So that probably holds up to the entire value proposition when it comes from a product perspective. Third but not least, I think expectations in terms of stocking up in the next quarter for the summer season ahead. And a lot of their products are getting sugar-free as well. A lot of energy drinks coming into the forte as well. So yes, I think momentum might continue. Saw a significant amount of profit booking. But that was expected because the stock had run up quite significantly over the past few weeks.